When we had done our Q1 result analysis, we had noticed quite a few critical trends. At 5.3% year on year, the revenue growth of ex-BFSI BSE 500 companies was less than that in previous 2 quarters. At 15.5% year on year, the profit growth was better than that in the previous quarter, but it was less than that of the 2 quarters before. In terms of market cap, large caps had performed well, but mid and small caps had endured pain. The silver lining was the operating margin, which had improved for the third consecutive quarter. Overall, the performance wasn't really great, but there were some positive signs. Now, as the Q2 result season comes to an end, it's important to know if these green shoots have taken root or been nipped in the bud. Now, these insights will help you realign your portfolio and stay ahead amid an ever-shifting market scenario. Hello and welcome to ET Money's YouTube channel. In this video, we'll analyze the Q2 results for you and discuss the key emerging trends. Now, this video is divided into 5 parts, each shedding light on particular key aspect. Now, this video is latest in a series of quarterly result updates. To access the earlier videos, do check our related playlist. The link is in description. Let's start with taking a look at the revenue growth, profit growth, and change in operating margins of ex-BFSI BSE 500 companies. We will then assess the performance of BFSI companies. In Q2, the revenue growth of ex-BFSI companies jumped to 9.6% year on year. That's the highest in the last 5 quarters. This signals a sharp improvement in business performance. But is this top line growth accompanied by bottom line growth too? Yes, it is. The profit growth of ex-BFSI BSE 500 companies have jumped to 26% year on year, which is the highest in the last 5 quarters. Now, this jump is accompanied by a significant increase in operating margin, which suggests improved core business performance. In Q2, the aggregate operating margin of ex-BFSI BSE 500 companies was 141 basis points higher than that of a year ago. This is the highest jump in the last 5 quarters. So overall, ex-BFSI BSE 500 companies have registered a remarkable turnaround in business performance in terms of revenue, profit, and margins. But that's about ex-BFSI companies. What about BFSI companies? Let's check their performance next. In terms of income growth, the BFSI basket of the BSE 500 reported a massive drop in income growth. As against 9.8% year on year in Q1, the income growth fell to just 0.9%. However, the profit growth rebounded to 7.8% year on year from 2.1% year on year in the previous quarter. Now, a possible reason for a drop in income growth is the lower net interest income. Since February 2025, the RBI has cut interest rates by 100 basis points, and this has lowered the net interest income of finance companies. Now, what explains a rise in profitability then? Well, this can be attributed to cost-cutting measures, improved efficiency, better margins on non-interest income, exceptional items, lower provisions, and a focus on more profitable product lines. Okay, let's now narrow the focus down to banks. In the earlier analysis, we noticed a drop in the net interest margin or NIMs of both private and PSU banks. Let's see if that situation has improved or worsened. PSU banks have arrested a fall in their NIMs at 20 basis points year on year as compared to 27 basis points in Q1. But private banks have yet to accomplish this feat. Their NIMs have declined further from 31 basis points year on year to 34 basis points in Q2. Okay, let's also look at the NPA or bad loan pictures of the two categories of banks. Here, both types of banks have done well. While PSU banks have resumed cutting their gross NPA levels, private banks have also joined the league after registering a modest increase in Q1. So overall, the BFSI sector appears to be bearing the brunt of the RBI's rate cuts, but there are ample silver linings that indicate good times ahead. Now, if you would like to understand in greater detail how RBI's bank cuts and hikes impact bank profitability, you can refer to a video we mentioned earlier. Now, in this video, we have also discussed key banking metrics in detail, which can help you make better sense in terms of interest income, NIMs, and NPS. Okay, let's now take a look at how various market caps, large, mid, and small caps have fared in Q2. However, before that, if you aren't a subscriber of our channel, please do subscribe and don't forget to press the bell icon so you never miss a video from us. Again, we'll check the three metrics: revenue growth, profit growth, and change in operating margins. For large caps, we have considered BSE 100, for mid caps, the BSE Mid Cap 150, and for small caps, the BSE Small Cap 250 indices. Now, in terms of revenue growth, all three market caps have registered a sharp rise in revenues. At about 12% year on year, mid caps have led the pack, followed by small caps and large caps. Now, the trend in profit growth superimposes that in revenue growth. Here, at a massive 65% year on year, small caps have outpaced both mid and large caps. But at 40% year on year and 23% year on year, large and mid caps have also done quite well. Finally, when it comes to change in operating margin, all market caps have delivered a better performance, with mid caps improving their margins by 183 basis points year on year, followed by small caps at 159 basis points and large caps at 128 basis points. Overall, all market caps have improved their performance in quarter 2, and the same reflects at aggregate level 2 in the BSE 500. Notably, a good performance by small caps suggests that the recovery is broad-based, which is a good news for investors. Alright, let's next see which sectors are at the forefront after Q2 and which ones are yet to do well. As we did last time, we examined the aggregate revenue and profit growth of companies from 20 non-BFSI sectors within the BSE 500. In line with the aggregate picture, multiple sectors exhibited a turnaround in quarter 2. These include auto, capital goods, chemicals, consumer durables, construction materials, crude oil, healthcare, iron and steel, logistics, real estate, and textiles. Broadly, these sectors have experienced higher revenue and profit growth compared to their previous quarters. Now, what explains this broad-based recovery? Well, a host of factors including income tax and interest rate cuts, GST rationalization, government incentives, capital expenditure revival, a good monsoon, and easing commodity prices are behind this resurgence. Two sectors, hospitality and telecom, have continued their dream run. The hospitality sector has benefited from strong demand, better infrastructure, supply additions, and major events. The telecom sector has been riding high on increased revenue per user, the rollout of 5G, AI-related demand, and the growing attraction of online gaming, among other factors. Finally, a couple of sectors have also resumed their disappointing run. These include the FMCG, gas transmission, and power sectors. FMCG companies faced disruptions due to the GST rate revision, which disrupted trade, led to inventory clearance delays by distributors and retailers, and caused operational challenges such as relabeling. Gas transmission companies have suffered from weaker margins due to higher operating expenses. Power companies experienced lower demand growth, resulting in muted numbers. Now, in the next section, let's take a look at companies that have stood out and those have suffered the most. From the ex-BFSI BSE 500 group of stocks, we selected those that have exhibited revenue and profit growth of at least 10% year on year in each of the last 4 quarters and whose operating margin have also expanded in each of the quarters. Now, doing so gave us a list of 19 companies. The companies that were part of our Q1 list have also been highlighted. 3 companies, Affle, FirstSource, and Persistent Systems, have made it to the list. These companies are bright spots in the IT sector, which has been witnessing a lackluster performance. 5 healthcare companies, Apollo Hospitals, Kaplan, Davies, Loris, and Lupin, have appeared in the list. Now, as discussed, the healthcare sector is among those that have turned around in quarter 2, and those companies are at the forefront. Another notable name includes the telecom giant Bharti Airtel, which has been delivering stellar numbers thanks to sectoral tailwinds. 2 new age companies, FSN e-commerce or Nykaa and PB Fintech or Policy Bazaar, have also performed well. Now, from the renewable space, Vari Energies has led the charge. From the BFSI space, 10 companies have posted revenue and profit growth of at least 10% year on year in each of the last 4 quarters. Of these 10 names, 2 are banks, Bank of Maharashtra and City Union Bank. 4 are housing finance companies, Aadhar, Aptus, Home First, and PNB Housing. These BFSI companies have beaten the sector blues and emerged as outliers, so keep them on your radar. However, please know that not all non-BFSI or BFSI sectors are included in our automatic recommendations. The idea is just to highlight the winners of quarter 2. So you can use this list as a starting point for further research. Dig deeper to understand the reasons for the sustained good performance. Do take the prevailing valuations into account. Okay, in the earlier editions of quarterly results update, we also told you companies that haven't been doing well. They reported shrinking revenue and profit growth in each of the last 4 quarters. The idea was to give you a list of names that you can avoid or dig deeper into for contra ideas. We did the same exercise this time as well for both BFSI and non-BFSI companies. To our surprise, there was none. Now, this speaks volumes about the kind of strong recovery companies have witnessed. Even in the BFSI sector, which has been marred by RBI's rate cuts, there is no casualty among the companies we analyzed. Alright, let's summarize the key takeaways from this video in the concluding section. In this video, we analyze the Q2 results of BSE 500 companies. Whether it's revenue growth, profit growth, or operating margin, the companies have done quite well. The broad-based recovery in corporate performance is clearly visible not just across market cap segments, but also across sectors. Since we began this series of quarterly result updates, this is the strongest quarter that corporate India has experienced. It appears that India's growth story has gained momentum, and if pace of reforms continue unabated, investors can expect good market performance. However, the markets are also hovering near their all-time highs, so it's essential to consider valuations as well. So what's your view of Q2 results? Do let us know in the comment section. And with this, we have come to the end of this video. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.